Welcome to Market Week in Review for the week ending October 7th, 2022. I'm Sophie Antel-Gibert, and I'm joined today by my colleague Paul Eidelman, Chief Investment Strategist for North America. Hi, Paul. It's good to see you.
Yeah, you too, Sophie. How are you?
I am very good. I'm especially thrilled that we're going to be able to pick your brain on a few topics today. I'm hoping first that you can give us a little bit of insight into the market volatility that has persisted again this week, and then maybe also help prepare us for what might be coming down the pike next week. Sound good?
Yeah, it does.
All right. So starting first, market volatility still here with us. What was behind this week's market volatility? And I will footnote that we are recording this on Thursday afternoon, October 6th. So I'm not quite sure what will happen tomorrow on Friday when this video gets released. But so far, what can you tell us about what's driving the volatility this week?
Yeah, I think that the core issue for investors is the same as it has been, that we've had this big inflation problem across all of the developed markets. And so everyone's parsing new information to see if it's lingering and what that means for central banks and interest rate hikes and ultimately how much damage they'll need to cause to get inflation back under control again. And so it's created a sort of an interesting setup where we're in a little bit of a bad news is good news phase for investors, where if it looks like growth is slowing down and with that maybe some price pressures are coming off, that's actually being treated as wonderful news for the equity markets. And
what is the world coming to?
Yeah, absolutely. And we've kind of had data on every side of that equation this week. On Monday, some bad news for the economy. The manufacturing survey in the United States, the ISM manufacturing survey, showed new orders contract pretty sharply at levels that are more or less consistent with the recession in the goods sector of the US economy and some weaker pricing as well around that. Equity investors loved it, even though it was kind of suggestive of a weak economy. We saw equities rebound very strongly. And then just a couple of days later, for more of the services side of the economy, there are indications of a lot more economic resilience, pretty healthy economic growth, and stable and sticky high prices in the larger services side of the US economy. Sounds good for economic growth, bad for the equity market. And so we've seen a little bit of a sort of parabolic shape to markets this week. Bad news is good news earlier in the week, and then sort of good news is bad news later in the week. So it's been quite choppy, but it really just all comes back to that inflation problem and how far central banks have to go to get it back under control again.
So you talked about, doing damage, and you talked about recessions and bad news is good news and good news is bad news. Where does this leave us now with recession? I'm curious. And with your recession outlook, does any of what happened this week inform a change on that outlook, or where are you at?
Yeah, I think we've been judging those risks to have been building up over time towards a recession. And it's just been the fact that inflation has stayed high and elevated and way beyond the Fed's 2% target for a protracted period of time now. And with the CPI data from a couple of weeks ago, again, surprising to the upside, with some of the wage data staying very sticky at very high levels, it looks increasingly likely to us that the Federal Reserve is going to have to hike interest rates north of 4%. And it will probably be about as much restrictiveness that they've put into the economy since the Paul Volcker years way back in the early 1980s. And I think in that kind of environment where you can never be totally certain, it does look more likely than not now that a U.S. recession could happen at some point in the next 12 months. And so I think while that's maybe a little bit scary, markets have been digesting these issues for quite a while, and we're down pretty sharply year to date, and we are seeing some significant signs of pessimism within sort of the more market psychology lenses of our investment framework. So even though that recession maybe is coming more in focus, we still think staying balanced and staying focused on more of a strategic asset allocation is sort of prudent here.
That's helpful to know where to focus, because that some of that news is a little bit unsettling, but we will try to stay with the bad news is good news kind of scenario.
Yep.
Speaking of focus, where are you focused next week? If you're looking ahead to next week's markets and any economic data releases, obviously we know that 3Q earnings are going to start being released next week. What are you going to be keeping your eye on?
Yeah, so the third quarter reporting season is going to kick off next week with some of the big banks, and that's going to be an interesting thing to watch. Up until now, earnings have been quite resilient, which is good, but against a backdrop of a slowing economy and some pretty acute cost pressures, I think there's a lot of question marks how long businesses can maintain their profitability in this kind of environment. So as of right now, the consensus is looking for the U.S. as measured by the S&P 500 to be able to maintain 3% earnings growth for the third quarter. So that's sort of the benchmark. So we'll see if we're sort of beating or missing around that expectation, but a lot of eyes towards what management teams are saying about their outlook and about this sort of very unique economic situation that we're in, slower growth, pretty intense inflation. So that's going to be a really key ingredient in the week ahead.
Great. Well, thank you so much, Paul. That's all we have time for today, and I know you're extremely busy watching the market, so we'll let you get back to that.
Sure.
So thank you for joining us. And thank you for joining us. We'll see you again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.